Hi there, welcome back to Dukascopy TV. I'm Ben Jones. With it being the first day of the trading week, it is of course time for the week ahead. Joining me on the line to discuss what could shake up the markets this week is Alistair Cotton from Currencies Direct. So Alistair, if we can begin by looking at the UK. The unemployment rate and inflation report are both out later this week. Do you see the unemployment rate dropping even lower? And additionally, how sustainable is this current economy? What do you think the potential catalyst will be that could cause interest rates to rise?
We think that the unemployment rate will drop, and that is because the UK economy's got a lot of momentum at the moment behind it. You saw last week's services PMI and previous week's PMI figures very, very strong still, and they're leading indicators to economic growth, and what growth is what brings the unemployment rate down. The key thing this week will be the quarterly inflation report, and that's the Bank of England probably going to be upgrading their growth forecast for the UK as well at that point. And over the next sort of 3 to 4 months, it's very likely that they'll start to indicate that interest rates are going to start to rise potentially first quarter next year. And they'll do that by changing forward guidance. I would think they're going to talk about a change to the wording of forward guidance on Wednesday. And what they'll say is, at the moment they're saying lower for longer, interest rates will be lower for longer. They're going to tweak that, and they'll start to say gradual increases in the interest rate. But they'll sort of temper that by saying it will be gradual increases and that they won't rise very high.
Now, in New Zealand, the retail sales are out this week. With the number of jobs growing faster than expected and wages continuing to grow in an already positive market, are we expecting to see high retail sales for this month?
Yes, we are. Again, the New Zealand economy has got a lot of momentum behind it. They're in an interesting position, the New Zealand Central Bank, in the sense that they've got a fairly robust economy that's going to continue to grow strongly, and in a normal situation, what would happen would be that they would raise interest rates to sort of try and counteract that feeding through into inflation, because they target inflation much like the British and the Americans. But they have such a strong currency at the moment that they're in a bit of a bind. If they raise interest rates, the currency strengthens again, and they're already been intervening in the currency to stop that strength. So it's very likely that the momentum that's been building in the New Zealand economy is going to continue, and they might even sort of overshoot in the near term their inflation target, because they won't raise interest rates. They just can't. They'd be shooting themselves in the foot. And I think what you'll see is that the Australia and New Zealand especially they'll be waiting for other countries to raise interest rates before they go ahead and do the same thing, just because their currencies are so strong in the current environment.
And finally, Janet Yellen recently stated that the US economy is poised for growth. Firstly, do you agree with this statement? And secondly, what are you expecting to see from this week's CPI data and manufacturing index?
So yes, we agree with Janet Yellen. The US economy has been a bit of a strange picture the data's been showing really over the last couple of months, because it was a tough winter in terms of weather, and that sort of distorted the data that was coming out over the first couple of months of the year. That's especially the jobs number. So we think now that that's sort of cleared out, you're going to see much stronger indicators of growth over the next couple of months.
I think we're quite weak in the
we think inflation's going to be benign still, so around about 2% year on year, which is bang on target for the Fed. So that's not going to cause any problems whatsoever. Manufacturing seems to be picking up, and it's looking likely, and this is great for growth, that the Fed are going to keep interest rates absolutely where they are for a fairly significant time. It's going to be the UK probably that raises interest rates first, and the US is a bit further down the road. So yeah, very, very positive for the US economy. There's lots of stuff going on. Earnings are still rising, which is why the stock market is still doing well. So it's a very good picture, but it's one that's sort of taken a while to develop and show itself.
Alistair, thank you very much for joining me today. That's all we've got time for now, but stay tuned throughout the week as we'll be covering all of these events and more. Goodbye.